Welcome back, viewers, to another episode here on Semiconductor Investing and More. Right now, we are seeing this huge push from artificial intelligence, and I kind of want to go over maybe some questions to kind of ask when thinking of what semiconductor companies can benefit from this AI push. Like always, I'm joined by an amazing co host. Today, I am joined by Billy. Good morning, Billy. How's it going?
Good day, Jose.
Definitely a good day, Billy. As we are recording, it's like you mentioned, Nvidia Day, right? It's kind of driving the whole semiconductor space up. Billy, I think we heard from Nvidia that AI is real, right? This AI hype however you want to call it, this AI demand is definitely real. I think we were waiting to see how it's where what's going to go and how big it was going to be. But Nvidia, with that guidance, we talked about it in the previous episode, where they not only foresee it for quarter two, but for the upcoming year as well. So I started thinking, hey, how should as investors start to think about this AI market and see where it can benefit or where are some players that can benefit from it. So while I was doing this, I kind of thought about a few questions that I think investors should think about when kind of trying to answer it. First is more just what will it impact? Will it impact the total addressable market? A small portion within the total addressable market? And does the company that I'm looking at have exposure in either of these spaces? For example, Billy, I think a perfect example would be AMD, Intel, and Nvidia. Right, all these three players, semiconductor companies, are huge in the data center market. So that means in the data center market, pretty much is being run by servers. So let's start off with the first question, right? Total addressable market. Does AI change the amount of servers we're going to need? At the moment, it does not look like it will impact much the server growth. We heard from TrendForce, I believe, about a month ago or a few weeks ago. We did an article where, due to numerous macroeconomic environments, even with AI servers growing, the total shipments of servers is going to go down. So, okay, it seems like AI growth is here, but it's not really going to push too much on the overall server market. What small portion within the servers will kind of see growth? And there is a big player here, and that is the demand for AI servers. Well, I think we talked about it that right now, a majority of servers being shipped are CPU based only. Jensen during their earnings call mentioned that right now we are in an unaccelerated market where most servers are just CPUs. There's no real form of accelerators, and he even said thumb NICs as well, which is network interface cards as well. So that's pretty much the only things that are happening within the servers right now. But we are seeing a huge demand for AI servers, which include GPUs. So obviously, companies that have exposure to GPUs can win because even though, right, Billy, the total addressable market for servers might not be growing, the total market for GPUs within the servers is growing so they can grow. But at the same time, those with CPUs and general products that go on servers might not grow that fast. I mean, we see it from Intel. Intel, even though obviously their chips go in AI servers, their chips were going on both AI servers and regular servers. So if that total addressable market is not growing, even though they have a nice growth opportunity from it, it's not going to really make a difference on their bottom line, on their top line number. Next, we have a company like maybe like AMD, right, Billy? So AMD has both their CPUs for data centers and they also have GPUs for the data center. So maybe they might not grow too much in the CPU side, but a small caveat: AMD is taking market share from Intel. So while the total addressable market is not growing for AMD, they are grabbing that market share from Intel. They also have GPUs, which can also benefit from this growth. So I kind of saw, I was looking at kind of price returns, Billy, for these three companies in the past year to date. Nvidia is over 160%, I believe, year to date, which is insane. AMD is roughly 80% up year to date, and Intel is pretty much flat year to date. And it kind of makes sense, right? Nvidia, they have this, maybe the actual numbers don't make sense, but it makes sense on the first, second, third place. Nvidia, who has the most to grow, um, because they have a bigger revenue base from GPUs, is obviously up the most. Again, maybe the percentage and kind of their valuations might not make sense, but at least the trend does. AMD, they have a little bit to lose with the CPU space, but they have a lot to grow with the GPU space in the AI market. They're second place. And Intel, who really, really doesn't have much to play in the GPU market, they're really not seeing much of this growth right now. So I thought these were some great questions to ask when kind of thinking about what are some stocks that can benefit. I mean, another company that I was thinking about was Qualcomm, right? Qualcomm. Their chips are mainly used in the mobile space. I don't think AI is gonna increase the amount of phones people need or the demand for phones. But within the phones, we might see that the high tier phones might need an extra chip that might help with on edge some form of AI computational need, right? So Qualcomm definitely has certain solutions there. I know Qualcomm in their most recent earnings, they showcased that one of their chips was able to run stable diffusion, the image generator, image AI generator on the phone, right? It wasn't done anywhere else. It was done through the phone. So there's still certain solutions where Qualcomm can kind of grow in this market. So again, it's a very simple topic and a very simple video here, Billy. So I just want to hear your thoughts when you're kind of, I know you're a semiconductor investor. I know you kind of look in other markets outside of maybe the processing, but within your space, Billy, how are you looking at this kind of AI space, and how do you determine if your chip stock or the company you're looking at right now can definitely benefit from it?
Discover the world of semiconductors without getting lost in the technical jargon. My new membership offers a perfect balance for investors looking to understand this exciting market. Using my electrical engineering knowledge and experience, I will release weekly exclusive videos ranging from quick 5-minute 101s to in-depth analysis, covering not just popular chip stocks, but aiming to explore every public semiconductor. Plus, join a private community of like-minded investors. Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Yeah, I'm glad you made this slide and put this topic forward, because you have to sort of think through, okay, AI is, if every company starts using AI, it's hard to know exactly which company is going to come out on top. But we all know that they're going to be using a lot of processing power, a lot of parallel processing, and a lot of memory all the time. Moreover, you're going to, Jensen Huang on last night's call said there's $1 trillion worth of data centers that will eventually be replaced by accelerated computing, uh, which he talks about with Nvidia's GPUs. So it's really, I saw a note this morning, I think from Morgan Stanley on Twitter, and they talk about this revolution in comparison to kind of like the .com and internet um, revolution. And the first ones that benefited from that was actually the semis. Um, More computing power, more build out of infrastructure, more servers, more memory. So I think you're pretty right on with the processors, especially GPUs. And we see, Intel's kind of getting left. They're trying to develop their own GPU and their AI, integrated chip. We'll see how that works, but it really seems like Nvidia's in pole position, and then AMD sort of as an up and cut, sort of in between the two, because they've had CPUs and GPUs in their portfolio for a while. Um, I think they're all going. I think the whole chip sector was up today a lot, and I think justifiably so, especially since a lot of them remain below their all-time highs. Not Nvidia. Nvidia is at an all-time high, but a lot of the so if you think about processors that go into data centers, I think will benefit. Then you have server makers, which are also in a downturn right now, but should benefit coming out of the downturn because there's going to be more content in each server. Theoretically, that should be a higher priced server. Then you think about the semiconductor equipment companies that make leading edge chips. Those should all benefit, as not only is there going to be a huge rush for AI chips, there's also competition from the leading foundries on being able to produce the best chips, TSM, Intel, Samsung, and they're going to invest a lot in doing that. And the more complex and leading edge the chip, the higher the capital intensity associated with that chip. I think there are some like Nvidia's DGX systems or DGX chips are selling for like $40,000 on the secondary market or something insane like that. So you get an
Yeah, I think we
expensive
saw
chip like
eBay
that.
stuff.
If you can sell your end chip for that much, the equipment companies will be able to raise prices on their equipment because you can justify that investment because you're selling very expensive chips. And the foundry should benefit too because they'll be able to quote higher prices for leading edge chips. So the whole ecosystem should benefit. I mean, a lot of these companies sort of are involved in co-opetition where they sort of collaborate but also compete against each other.
Mm-hmm.
The chip designers work very closely with the foundries. The foundries work very closely with the equipment companies. It's not like they're all one company, but it's a little bit kind of like that. And I just think the whole ecosystem is going to benefit. We're starting to see it take off. Fortunately, for some of the stocks in this space are still below their all-time highs because we went through that terrible bear market last year. And while we're up a lot, we're still not at new highs yet for some of these companies. So I think there's a lot of opportunity. Obviously, for a company, you just have to make sure that the company you're in is not sort of competitively falling behind. That's the problem with Intel. They're trying to execute a big turnaround and catch up. If they do successfully execute and catch up as they say they're going to do, the stock could take off in a meaningful way, but that really remains to be seen. So you have very high-priced current leaders like Nvidia. Then you have sort of the bargain basement companies that may be falling behind and are uncertain, like Intel. But there are a lot of companies in the middle that should benefit and are doing pretty well, and they're still priced, reasonably well, especially compared with some of the other software names in tech. So I've liked hardware for a long time. I think the hardware ecosystem is really going to benefit from this. In terms of, I think the software incumbents are probably going to stay on top because they have the money to invest in all of this. Something might come along that disrupts, like a Microsoft or a ServiceNow, but I don't know. Microsoft, partly owns OpenAI, so it's going to have everyone's going to be writing their own general large language algorithms, competing with startup large language algorithms, and trying to sell them to customers with proprietary data. So I think that's going to be pretty competitive, but the hardware names are pretty well established and pretty hard to displace because of the sheer scale and manufacturing complexity. So I mean, I've liked tech hardware for a long time. It's sometimes rough with how cyclical it is, but that's probably more automatic to benefit than, I would say, software. And then I think the cloud infrastructure names will all do well because that's where a lot of computing takes place and there's going to be a lot of demand for leading edge computing. And I don't think a lot of companies are going to want to build out their own data centers with bajillion-dollar GPUs, packed with bajillion-dollar GPUs. I think Meta Platforms is doing that, but most companies are
Hmm.
not as well off as Meta Platforms. So the cloud guys should all benefit as well. Just really good for the tech sector as a whole, I think.
Definitely, Billy. I agree. I mean, when I'm looking into this market, not just the hardware space, right? These infrastructure, as many software developers, like you mentioned, are probably not going to go out there and build their own server to kind of build whatever type of API or application that they're trying to design. They're probably just going to kind of rent out this usage base, this performance base from some of these cloud server providers instead. Which is obviously great revenue for them. And then the software guys, right? I'm pretty sure there's going to be plenty of software companies that are going to try to benefit from these large language models to kind of create some form of revolutionary product. Um, to me, though, Billy, one thing that is, I mean, I'm not too much of a software guy, but it does seem like every other week we're seeing a new software powered by AI or a new AI software powered product. And it's kind of crazy of how this might make it a very already a competitive market even more competitive, where maybe back then where you need a whole team of software designs to launch an app, maybe now you only need like a handful, and you can really make some damage to some of these big players. So I think the software market is still great, obviously with the big players, but I do believe it now opens up the opportunity for a lot new players to kind of enter in this space.
Jensen Huang did mention on last night's call that a lot of startups are founded by ex DeepMind executives, ex whatever, uh,
Mm-hmm.
Google players, or going out doing their own AI startups. So since competition, there's a lot of well-funded, and I'm sure the venture money is going to be flowing into every single AI startup uh, currently. So there will be some innovation and potential disruption here. But if you think it's just so hard it's so expensive for all the computing to scale that. I think it's going to benefit the large infrastructure guys and the largest chip makers um,
Mm-hmm.
that currently have pole position. I mean, we'll have to see what happens because no one's ever really seen anything like this before. But in general, I think it's going to be good news for tech. And look, the tech sector has outperformed over time. It's has worse drawdowns than the overall market when there's a
Mm-hmm.
downturn. But over the long term, this innovation um, is really going to propel it, I think, higher than other sectors. Not that you shouldn't be somewhat diversified, but um, I think the whole tech ecosystem is going to benefit from this, obviously.
Wait, Billy. There's something else outside of the tech market.
Yeah, I think we all learned that last year when everything was down except the energy sector, which was up 40%. But things seem to be getting back on track in 2023.
All right, Billy. I think this is a great way to end this segment, and thank you for your thoughts. I'm pretty sure the viewers enjoyed it.